Hi, I'm Colin Williams at the Global Derivatives 2016 conference, and I have with me Marcos Carreira from the University of Sao Paulo in Brazil. Marcos, welcome. Can you tell us some of the special characteristics about the Brazilian market that make it interesting?
Well, until recently, Brazil was an investment-grade country, and you had an investment-grade country with double-digit interest rates. So that alone is something interesting. Brazil's peculiarities, the way the day count interest rate market works, the fact that it is a non-convertible currency country, the fact that it's hard to get in Brazil, and the markets are still volatile, make it let's say a rewarding country for those who look in how to trade it, because it's sometimes not that crowded.
Right.
So the volatility presents opportunities for those who let's say
Ready to
did their homework. So
okay, how does the interbank market work in Brazil?
what is interesting with the interbank market in Brazil is that most of the interbank market is conducted through derivatives on an exchange on a central counterparty, instead of, let's say, the direct trading that is useful in the G10 countries. So although, let's say, cash markets will trade and determine the fixings on an interbank basis, let's say outside the exchange, the fact that if you're an investor, you are trading with the banks in the same market on the main, let's say, hedging instruments, is also interesting.
Okay, and how about offshore markets? How do they affect the local market?
Well, because again, it's not a convertible currency, there is a developed offshore market of derivatives that will look into the onshore market for the fixings and for, let's say, hedging activities. With things happening like in 2011, there was a tax on FX derivatives, so if you are selling dollars and buying reais, you would pay a tax. That also helped to increase the liquidity of the offshore markets, because you wouldn't be trading onshore because of the tax, so most trading would go offshore. So you have good liquidity offshore on NDFs and FX options, and also CME has FX contracts, FX futures for the real.
Okay.
So the liquidity of those instruments has been increasing in the past 10 years.
Okay.
And the demand and supply that you have on those markets will influence the onshore market.
So what do you think would be some particularly good asset classes for Brazil?
You always start with interest rates. I mean, Brazil's interest rates, they're not the 2% per day that you had in the hyperinflation times, but they are still high, and you can play either the slope of that curve or the fact that you have those high interest rate curves will make the currency an interesting one in terms of carry trade as such.
And
but it starts with the interest rates.
How would you assess liquidity?
If you are a foreign investor and you had made a decision to, let's say, enter the market directly, and if you are trading on the exchange, for the most liquid contracts, you'll be okay. But if it's likely that you're facing, let's say, a bank that will give you prices on offshore trades or such, the liquidity on NDFs and FX options is quite high. So you always try to, let's say, look for the most liquid maturities at first.
Okay. And what papers or publications would you recommend people read to understand the Brazilian market?
Oh, actually, you'll never ask this question. I have a book. I'm a co-author of a book on Brazilian derivatives and securities, and it's already available at Amazon.com. I co-wrote it with a friend of mine from Morgan Stanley. And in that book, we describe the market, the history of Brazil, why we trade on, why we have a day count on business days, how interest rate markets work, how the FX market work. And we identified a gap in, here is a publication that is not necessarily those Latam guides that the banks would release from time to time. And the last chapter of the book is always a reminder about how those things get obsolete fast. Because taxes change and depending on the regulations, the market changes and such. Because that's one of the main things in Brazil, that you are going to be very influenced by taxes and something.
Right.
So although our book is a start, you always need to be monitoring what happens with politics
Right.
and taxes.
So do you think the Olympics would have any impact on the Brazilian market?
No, I mean typically the main event that has an influence on the Brazilian market are the presidential elections, because in Brazil the president has let's say very strong powers compared with let's say some countries in Europe, and depending on how politics go, let's say do things that will change how the currency behaves, how the interest rate behaves and such. So for example, on my talk here I highlighted how in the past 2 presidential elections there was no interest rate increase in the 6 months leading up to the election. So it's always politics and taxes.
Okay.
These you are never going to find those in books. You need to have someone on the ground
Right.
giving you good information.
Okay, Marcos, thank you very much. That was great. Thank you.
Thank you.